What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for December 2nd, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, being said, pretty flat day, especially considering what we got yesterday. Got a little bit of hopium in the markets, and the market started to rip. And then today we had a pretty flat day. But as you can see, technical wise, we are looking for a potentially really good setup for tomorrow. And guess what? Tomorrow we have non farm payrolls. Now, tomorrow could be a big event because now we are trying to gauge the consumer. So, if the consumer is looking good, it could turn out to be a pretty big day tomorrow. Again, we also do have Fed Evans speaking tomorrow at 10:15 a.m. Eastern Standard Time. Again, a lot of the different Fed members speaking can bring volatility to the market. It's not pivotal unless it's Powell, but nonetheless, it could still bring some volatility intraday. So tomorrow, again, will be a big day. I think it will be the last real big news event before the 13th and 14th, when we get the next core and the next monetary policy. Again, a lot of the different things I talked about yesterday with Powell, it'd be interesting to see how that does play out. So again, if the core continues to come down, that will be great. That means our rate increases will potentially slow down. Again, we still have to see what monetary policy actually brings. We can speculate all we want, but ultimately we will have to see how that plays out. But right now, again, the shift in concern is going to be the consumer, and why non-farms will be a bigger play tomorrow, because we want to see again where they stand. Again, there's a lot of misleading information that is currently out there. Even today, looking, the PCE inflation lowest in 10 months. Personal spending remains robust, which is actually quite interesting because of the fact that people have been spending essentially on their credit cards. At least it's the way it's the perception that is there, is that a lot of charges have been on their credit card, and we're wondering where inflation is gone, because it's like inflation was here one minute and gone the next, and the fact that it is essentially seeped its way into rental and food, which in turn has got people to start charging credit cards to be able to essentially put food in their mouth when their paychecks are essentially going all towards rent and utilities, because power has been extremely high for a long period of time. So it's drained a lot of savings. And so people aren't spending on normal things that they would. Now, being said, we do have some very good reports coming from Amazon saying that they've done really well as far as sales are concerned, which is great. People are going to take advantage of Black Friday and Cyber Monday sales when they can, because they're trying to save every dollar that they can. But again, in hopes that things get better. There's a lot of people that are still on severance packages. You're still getting reports about people getting laid off, which is interesting to see, and that's why tomorrow is going to be such a big pivotal play. But I think again, it's going to introduce a lot of hopium, as you still get a lot of people on essentially severance packages that we won't see until around February. But another big thing is I am more so looking past monetary policy. I think monetary policy and everything else will play as expected. But my next big gauge would be earnings. And I want to see credit card earnings. I want to see big corporations or safe havens, Apple, Teslas. I want to see how they're holding up. Again, the interpretation as with these big layoffs, that it means more profit for these companies. But you have to understand that these companies are essentially not expanding. So the growth rate is really slowing down. because of that fact that they have to cut costs so that way they can still be profitable. But where does that leave the consumer? How many companies are actually doing this to the point where people aren't getting hired, and how many people are coming off of severance packages and still can't find jobs? So we're trying to wait and see how that plays out. It's not saying that we can't recover. It's not saying that we won't get our way out of this. And recessions are typically can be very quick. Again, I think I've lost track of how long we've been in a recession so far. It's been a couple months, and I think we're pretty close to almost being in a depression, a global depression at this point. And again, a lot of misleading information, and it's going to play out eventually, but we have to see how it does work. And trying to think that we're going to come out of this in a V-shaped recovery, I think, is very premature, and to think that something like that is really going to happen. But well, again, we have to see, and this is why you have to be adjustable if you want to be an active trader in any kind of markets. The markets change. Speculation. There's a lot of speculation. There's a lot of what if possibilities. I think right now in this current environment, there hasn't been so many what if scenarios that could potentially play out here. And walking on eggshells, many of the different things I've talked about. So I don't want to continue to be a dead horse there, but again, sheer focus is going to be on the consumer from this point forward, unless inflation starts to creep back up, which is very much a strong possibility, and also why the Fed will not start reducing rates at any time soon. You're going to have high rates at a long period of time, again, limiting a lot of people from purchasing new homes, and then ultimately understand that the person that's going to hurt the most at this whole thing is the consumer. You're going to destroy demand and then play it from that point. And so this is why weight is shifted and getting more weight into specific things like PCE and looking at essentially not so much growth rate right now, but in a couple months here going into Q1 of next year. Again, I think we could potentially start to have a solid recovery towards the back half of the year next year. But it all depends. I still do believe there could be another potential crash, an actual crash. This year wasn't really a crash. It was more so just a gradual grind down, recession from what we've had, and introducing rates back into a market at a rapid pace. And this is what you get is a lot of volatility this year. And so I think that will kind of work itself out towards the middle of the year. But again, I think we could be in for a bigger event come in September if the consumer cannot bounce back. And that in itself leads to a whole other chaotic hot mess that's way outside of the markets. Nonetheless, I am rambling quite a bit here, so I will slow it down there and start looking at some charts here. So again, I do like the way we look technically going into tomorrow. Again, if we have a strong report tomorrow, we could make a nice run up to 4,200 here is potentially our next move. And then that would be essentially our next resistance level. We have to understand that a lot of times, something I've talked about when looking at this is every time is this trend has been a long time coming, right? It's been a long time to even attempt to try to break this, and we might actually be breaking it right here. Although every time I've talked about this particular trend breaks that we have these breaks, and then you normally, like I've always talked about, we normally recover about 75% of whatever that trend break is. But the problem here being is that it hasn't quite been that. It's been a very weak breakout, and then we break back into trends. But again, this is the first actual breakout we might actually have. So tomorrow's PCE could be big in the fact that we could start making our way up. At least I think if we do get some sort of rally I'm talking about between now and one actual earnings report. So I'm talking about a month and a half. Again, we don't have a lot of news aside from core. If the core and everything lines up as expected, and monetary policy comes in at 50-point basis move, I think we could potentially see 4,300 as a strong possibility there going into earnings. And I think earnings is going to reveal some things. It's going to potentially drop us back down, play more chop. And then again, we have to see where the consumer is at there, see where rates are at the point, see where inflation is at the point. This is why Powell keeps reiterating a lot of this stuff, because it can change very quickly. And so you can't project 6 months out, and market makers and everybody else, institutions, they want to project 6 months out before investing to try to say, okay, well, I felt like my money's comfortable now. I can let it sit for a while. But there's so much uncertainty that the market is avoiding any kind of big moves right now until it gets true direction. And again, we saw that on this candle here. This candle actually points out, if you look over this past year, this candle, this huge candle, you can see these institutions, huge candles on certain buys here. This one being one, thinking we're recovering, and we had a massive ripple, and find out that no, we actually are not recovering, that inflation is really bad, so we continue to sell off. And then this last one here, that roughly around at 3,500 and potential breakout. Ever since that 3,500 dip from institutions, it looks like we have actually made our way back up, and potentially actually breaking out here to retest, I think, that 4,300 again. If everything aligns with the middle of the month, I think that could be a very strong possibility going into earnings, and bring a lot of things back up, maybe to only reset things, and really depending on how things come out, because you have to understand that we have had some big bear market rallies, and I think this is just another big rally before potential fallout coming later on with a black swan essentially generated from the consumer, and losing that demand there, and seeing what that does. And so whether that's a housing crisis or China lockdowns continuing, or the European financial system crumbling, whatever the case is, there's a lot of black swans that could play out around that time, that between now and then, that could start to sell us off again, and not make an all-time high. But I think again, we'll have to see. This is end of year, obviously a really bad year, one of the worst we've had in a while. So we have to see again how this does play out. But again, PCE, if it's good, I think we could start to make our way back there. Again, if we do break, I think again, you got to go with psychological numbers. The 4,200 would be the next potentially logical run. Now there is resistance on the way up, but I think that would be one of the ones that you're going to get rejected pretty hard off of in our attempt to make a 4,300 run in this short-term rally. But again, we have to see how everything plays out. So that's what I got there. Great sign for the bulls is that we did break the 105, something I talked about. I think we can get one pretty big dip down to the 102 on the dollar. If that's the case, you can see that more fuel to that run up to essentially that potentially 4,300 mark on SPX. I think is a strong possibility. Bitcoin, again, I think it's going to struggle here with FTX. I think once that whole situation kind of dilutes itself, I think this thing will recover pretty quickly. But again, it's starting to accumulate again around the 1,500 here. So, and again, it depends. Everything's about timing. If we get a black swan, Bitcoin is fragile right now with FTX stuff. It could continue to sell off if that does play out. Again, we don't know these things. We can assume this is the bottom, but time will tell. As long as you're DCAing for some of this, I think it's important right now. Again, you're not going to see these levels in a while. Not saying we can't sell more. Just be mindful of that. We definitely can. But manage your risk and what you can do without for the next 5 to 10, I think is the best way to manage risk. Again, not financial advice. Tesla. Tesla finally, I talked about this yesterday, breakout. This could be the retest here at the 191. I really want to see how this opens up tomorrow. Again, if things are bad, again, it could come dip down even back down to the 182. Would be another good potential entry, or we could be making our way back up to the 50 EMA, which is the 215. So kind of watching that to see how that does play out tomorrow. So I want to keep Tesla on watch tomorrow. Again, a lot of these could go either way. Apple, again, this one here, I do like Apple. It has always been a safe haven. This one here also needs to try to break out here. We need this thing to ultimately over these daily resistances. So if you can get a 152 on this, non-farms could potentially do that with the amount of weight is currently holding. It could break out here and then could get a nice run up to 156, which would be great. Otherwise, could revisit the 136 again, just all depending on how things play out. BA again, strong resistance here at the essentially the 150, 178. Keeps getting rejected pretty hard. Again, we've had parabolic move, no retesting. The longer it continues to stay here and consolidates, the bigger move it could actually potentially have down. So just kind of watching that, or potentially up. But the fact that it's already gone up quite a bit and is very overextended, there's a better chance that this thing will sell off and retest before it heads back up. So looking at that JPM, again, parabolic move on all the banks, same kind of scenario. It did kind of break out this resistance at the 136. So kind of looking to see on the retest if this thing can continue up, at least at the 143. Otherwise, again, very overextended. Banks are all very overextended. Goldman Sachs, same thing. Needs to break out over the 388 to continue on. Otherwise, again, I think this thing can at least pull back to the 356, if not head back down to the 322. So, but that is pretty much what I got. Again, it is Friday. Again, we are really waiting on non-farms, and then in between that, I think that will guide us into next Wednesday, and then we'll start correcting or whatever we need to do going into monetary policy and into our next core inflation again, which I think is going to align. All that stuff is going to align. Again, my biggest shift now and focus is to be concentrating on the consumer, kind of watching the data there. Again, a lot of the data that comes from the consumer is very misleading. And so it's kind of just trying to find those headline news articles, essentially, that will talk about the consumer, where they're at, watching credit cards, watching the housing industry very closely and seeing what's going on there. And then going from that point, again, we're not really going to know roughly around this time. So we'll know more when we get Q4 earnings, which is still, again, about another month and a half out before we start getting those coming in, starting with the banks. So with all that being said, if you made this far, I do appreciate you. Go ahead and drop a thumbs up. Until next time, I will see you guys later.